Good morning, this is Steve O'Hare from Signal Centre and welcome to Thursday the 26th of August, and it's number 448 on the Talking Bulls series. Joe, again, not with me this week, but we'll be back Monday. I'm holding the fort in the meantime, so let's really sort of like look at the market highlights from yesterday. This is courtesy of IG Morning Call. The recent Asian market rebound has come to an end overnight, with Chinese and Hong Kong markets leading those declines. In particular, Chinese tech stocks have enjoyed a welcome period of strength as investors seek to take advantage of the recent dip. However, regulatory oversight expected to curb the growth within the sector. We're seeing the sellers coming back in overnight. Also saw Korean Kospi index move lower after the country became the first major developed nation to raise interest rates. Markets continue to keep one eye on Powell's Jackson Hole appearance tomorrow. And we've also got ECB minutes later, GDP revision also, and jobless claims data. Keep an eye out also for Fed non-voting members, Kaplan and Bullard, whose comments will probably set the tone of tomorrow's Powell's speech. So let's dive into the technical analysis. That's what you've come here for, our view on the technical analysis of the markets currently. And we're trying to pick up the price action, the patterns and the indicators to give some idea and some color on what's going on from a technical standpoint. So looking at this, it looks like a head and shoulders formation. Let's draw the neckline in. This is the neckline here. We are below the neckline, potentially due a retest. We've seen bullish price action this week, but this potentially is playing out to sort of like show a potentially better or a longer term dollar move, which we can just jump across to the dollar index, and we can see we've tested this 93.44 level, which we saw back in March, and we've rejected it at the moment. Didn't quite close above it, and rejected it quite aggressively this week, but plenty of time or room for the dollar to snap back. Really seeing support around about, well, let's jump down to the daily chart. We've got a nice trend line coming in on the dollar index, and so we should see support around about the 92.50, and before that 92.65 on dollar index. Back to the euro dollar, and really looking at what we've done on the in reverse and the opposing the euro dollar and the dollar index. We saw a break of the support again back from the March lows, and prices has managed to recapture ground above that. So there's a little bit of respite ahead of Fed's speech, Powell's speech tomorrow at Jackson Hole. Cable has performed a little bit better. Again, it's stalled in front of the previous swing low from July. So we've got a higher low and a nice real reversal on here. This is the daily chart. So this is a morning doji star formation, which is pretty powerful, although we posted a bit of a hanging man candle yesterday. So a little bit of potential for negative price action, really, although this does shape up really to be an inverse head and shoulders. These are the sort of chart formations that we're always looking out for, something like that, down to there and up. So yeah, still a little bit of hope for cable, but dollar's strong, all down to tomorrow really, and that's what we're waiting with bated breath. The triangle formation in dollar yen just been broken to the upside, and it's something we've been looking at for all of this week really. Had the trend line drawn in yesterday, and had 3 points, so it's a good trend line. If we get a close now below above that trend line on the 4-hour chart, which is an hour from now, there's good potential to see that, especially if we manage to break above the 110.23 high. Good support coming in the form of this upward trending support line. We've said that dollar yen seems to have been holding the fort for dollar this week, despite the pullback overall. Aussie dollar, again, similar sort of formation really, inverse head and shoulders. So one of them's going to work, one of them's going to play out nicely. My money is on the dollar yen really, from that perspective. Aussie dollar needs to see a break above 72.80. If we don't recapture ground above there, then 72.37 comes under pressure, and that could lead to a move there, if break down lower, if we manage to break down through that support level. Let's take a little look at cryptocurrencies, see what's happening in the world of Bitcoin. It stalled above the 50,000 level, and we've retraced a corrective move lower. Looks really set to target the support coming in at 45,500. Then below that, a better support coming in just below the 44,000 mark. Well, overnight, you can see the sort of the negativity has taken out yesterday's low at 47,000, and it's under pressure now. Will it be able to hold on to that negativity after 10 o'clock? If it can recapture ground and maybe stall or not close below the 47,100 level, then hopefully potential move to the upside again. Cardano has had a correction. This is the all-time highs we've seen this week in Cardano, and just below the $3 mark. But we've had a typical correction in markets. We see this a lot. Once we've had a sort of exponential move higher, really support coming in around about current levels, around about the 250 area. Below that 238 would also act as support, and now some resistance coming in at 280 above, and $3 obviously. So Cardano trying desperately to hold on to those gains. On the commodity side of things, let's take a look at oil to start with. Crude oil has broken through this downward trending resistance line and has performed pretty nicely and held on to gains also. We posted a shooting star candle on the 4-hour chart, but it hasn't really had the follow through. Really need to get below 66.80 to shake some of those longs out. Above, if we take out 68.42 on the upside, this really nice impulsive move higher on the short-term charts should continue. Bear in mind the monthly candles that we've been looking at and we've been banging on about, this evening doji star formation. We're seeing that confirmation candle for this week, for this month, recovering slightly. If we manage to close below the 66.80 level on a monthly basis, which is next Tuesday, then that would be pretty negative. But as we see that from the daily price action, the bulls are really trying to sort of force this issue after a reaction from the 61.56 level. So we've had almost a 10% correction from there. It's a pretty nice correction. Don't forget about gold. Really sort of like stalled at the 1810 level. So the 1800 psychological level for me is held. We did pop up to 1810, and again on the daily chart we formed an evening doji star formation. So really looking for me, it's a break of 1770 would lead to a more aggressive move lower. So support really has to hold this week for me. Otherwise, we could be under severe pressure. We had we thought this was maybe a potential bullish flag formation, but it seems to have fizzled out a bit like one of those damp squid fireworks on a November the 5th, is it, or November the 11th? Remember the 5th of November, I think. So yeah, gold stalling and looking on the back foot at the moment. So maybe an indication that dollar still has a little bit more to the upside. If we get dollar strength, normally gold comes lower. And we'll finish off with indices. Let's talk about these. From the FTSE, again, we're on the 4-hour chart. We've seen price action try and recover from the low on the 19th, which was last Thursday, so a week ago today, and it's recovered really nicely. But we do face some pretty strong resistance up above now, coming in around about 71.70. We're trading 71.25, so a little bit on the upside. Also interim resistance just above 71.52, but we have reacted really nicely in the last hour from a dip down to 70.92. So that looks pretty positive. A little bit of a bullish hammer forming on the 4-hour chart, and you can see if we dive down to the hourly chart, the reaction lower, which is pretty typical for an 8 o'clock open in the indices markets. Same sort of thing. We saw the same sort of reaction in DAX. That's reacted really nicely off the ATR weekly levels. These are really good levels to sort of try and forecast the range of the day. At 15,700 provided support today, and it really did provide support. So reacted really nicely. That would be we're looking at resistance coming in around about 15,850. Dow Jones side of things, we're not far away from the all-time highs. Again, formed a bullish engulfing candle on the hourly chart, or bullish outside candle, should I say, on the hourly chart, but more focused really on the daily candles. All-time high comes in at 35,630. That's still looking positive, although it did form a hanging man candle, which led to a reversal in price action. And then we found support at the potential upward trending support line and have reacted really nicely off that with a morning doji star formation, although the last 3 days I would say pretty muted. So again, Jackson Hole maybe. Daily chart on the Nasdaq is a little bit different. We hit a new all-time high in Nasdaq, 15,400. Really nice round psychological number to put a block on things, and prices have moved lower overnight, got down to 15.3 and have reacted up from there. So trading around mid that 100-point range that we've seen over the last 24, 36 hours. S&P again, all-time high yesterday, 4,500. Again, nice round psychological number. Price action is holding around there, 44.94 at the moment. So still a bit of potential for the upside, but it does look like the momentum is stalling. So yeah, keep an eye on that. Aussie 200 has reacted lower, overnight sell-off we can see, and the same in China 50. China 50 again, support coming in around about 14,500, a break of there, and it's good night. Hang Seng, again, we can see the reaction lower overnight and into this morning. And Nikkei, again, this descending triangle, support coming in really around about the 27,000 area for that. So that about covers off the technical analysis we see today. Hope that's been comprehensive enough for you. I know it feels a bit rushed. I don't know why this morning. However, let's have a look at gun to head, the little bit of fun we have in trying to predict a move in the morning at a certain time when a gun is held to our head. So this is what I did yesterday. Let me just try and get it up just to prove it, just so you don't have to look back and say, are you sure you said that, Steve? I'm pretty sure I did. So, but it looks like I've deleted it. I have deleted it, so you can't see it. So you'll have to look back at the video to check I'm not fibbing. So I went for a buy in dollar yen, very short term, 109.77. The stop was at 109.64, so only a 13 tick stop in dollar yen. Target was 110.03, which it did hit the target, so really chuffed with that. That was only a 2-to-1 risk reward. Well, only. We'd all be happy with that. 2-to-1 risk reward on that trade. I think I might be hitting all-time highs while Joe's away. So I don't want to mess it up in this last couple of days before Joe gets back. Otherwise, he'll never believe me. So contemplating this again, I'm very tempted to go with dollar yen. Stick with it. Why not? We've broken out of the triangle formation. Again, we've got a little bit more on the upside on the hourly chart. Could do a nice little, I don't know, it's a little bit, it feels a little bit too quick to go with that. But on the opposite side of things, gold, looking to fade that maybe. Oil mid-range. Cryptos, only when I'm desperate, son. So I've got Forex, and I am going to go with, I've got to go dollar yen. Sorry, me old mucker. I've got to go dollar yen. Well, we're swinging back to this high here. Look, I'm wasting time. Let's just get on it. Risk reward is going to be pretty tricky on this. because we just had an extended move. Listen, if I'd have done this 2 hours ago, I'd have been looking at this bullish flag, this inverse head and shoulders formation, which I've picked up on this week, and it's played out really nicely. So let's get long here. Let's round it up. 110.22. Stop on this, really. Have a tight stop. Doesn't feel nice to have a tight stop. A bit closer than that. 110.07. And the target is a little bit above the ATR level, but what can I do? The only thing I'd do is tighten the stop up, but that would make it really, really diving in. So anyway, getting long at 110.22, stop at 110.07, target. I'd rather do 110.45, but I want to get a 2-to-1 risk reward out of it, at least 110.52. If it gets close to there, I might take profit. I know I'm not allowed to because it's a gun to head. So that's the trade idea for me this morning, which will go against my gun to head challenge. Yeah, so that's about it. Day ahead, as we've mentioned already, we've got the US initial jobless claims, GDP revision, I think, and Fed speakers. So that to watch out for. US dollar crosses obviously will be impacted by that. So thanks for joining me. Hope it's been helpful, and I look forward to catching up again tomorrow.